Welcome to a world where information is reliable, transparent, and accessible to everyone, where authenticity can be verified through consensus. People's votes, financial transactions, and public data can't be altered, so histories can't be rewritten. You can be off the grid if you want, or transact how you want. While countless industries and even nations around the world have embraced a more secure system of storing and managing data. And since every strong system needs reliability in order to progress, we're asking, what technologies could shape the world of 2025? This is Show Us the Money. We're a team of dedicated researchers highlighting the companies we believe will play a defining role in the world of 2025 and hold the potential to deliver strong investment returns. It's not financial advice, we just bring you our research. So what are we looking at today? Everyone has been talking about this, and it's about time we give it a shout as well. We're gonna explore a technology called blockchain and its two most famous applications, Bitcoin and Ethereum. Blockchain technology has the potential to change almost every industry and revolutionize how we connect and exchange information with each other. So, after we dig into these technologies and applications, we'll ask the question, what could an investment in blockchain technology now be worth in 2025? We're going to dig into a few topics here. We'll explain what blockchain is, then go into the most famous names associated with it, Bitcoin and Ethereum. So let's take a look at blockchain. In a sentence, blockchain is effectively a method of ultra-secure digital record keeping. A good way of thinking of it would be as a ledger that's open to everybody to check and verify. This is called distribution, and it prevents false information being added to the chain as it's inherently self-policing. Blockchain technology has become very popular in recent years, and for many reasons, including privacy, security, transparency, and even accuracy of information. Blockchain networks have more than a few safety mechanisms. Every block of data has its own digital fingerprint to identify it. They are immutable, which is fancy talk that means once something's been added, you can't change it. Now that I think about it, does that mean I can't delete those drunk tweets? Anyway, it means full transparency. Blockchain networks also depend on mathematical puzzles being solved to increase safety. So tampering or making changes to these networks is almost impossible. The most famous examples of blockchain applications are found through cryptocurrencies, which we'll explain shortly. But it's important to realize that they work on what are called decentralized blockchains. Now, decentralization in a general sense effectively means there is no central authority figure, like a government for example. It moves the power of decision-making and control from one localized place to multiple locations, so it spreads it around. In terms of blockchain, this sort of decentralized ledger technology can have beneficial real-world applications when situations occur like a restaurant or hotel not keeping a record of your booking, even though you definitely booked it. Somehow the information about your booking just got lost or deleted, either by someone's mistake or by a glitch on a centralized server. No trace of it anywhere. Another example would be the US Supreme Court citing websites in their verdicts that are later deleted or changed without any record of those changes available to the public, meaning that legal history can go unsupported. That's the sort of problem that can occur when information is stored in one central system that only very few people have ultimate control of. And these sorts of situations can be potentially avoided by using decentralized blockchains, wherein the users themselves are collectively the authority, having a distributed system where the information is held on the computers of everyone who is on that blockchain. So what could this kind of decentralization bring to the world? Well, blockchain technology can potentially solve a lot of issues, like transparency in finance and other industries, accuracy and integrity of reported content in journalism, and even food traceability for large companies like Walmart, while at the same time also vastly improving data security. Some of the goals of a decentralized blockchain are making access to assets and information more straightforward for the user, and with no reliance on third parties for the maintenance of the network. So the bypassing of a central authority figure gives people the potential to be outside the system in some regard. Now, this can have both positive and negative connotations, of course, but some arguments against centralized systems include things like a lack of transparency, speed of transfers, data security issues, and even the possibility of censorship. Decentralization, on the other hand, can address those problems. Being outside the system, there is no one company, no one group of people, no one government with the ability to modify data already on the blockchain, because everyone on the blockchain is able to see when and what information has been changed. That would remove any fear of embezzlement, fraud, or just data tampering itself. Users won't have to worry about decisions being made on the judgment of a few entities in power, meaning less interference. So what are the current and potential future uses of blockchain? Well, the technology has a vast range of potential, and its increasing popularity has led major industries to take notice. So let's take a deeper dive into some of those possible use cases of blockchain. First off, cryptocurrencies. You've likely already heard of these, and it's probably why you're here too. Cryptocurrencies are exclusively digital currencies, meaning money, that can be exchanged by individual parties securely using blockchain technology. They're meant to be an alternative payment system free of central control, but that otherwise could be used just like traditional currencies. This means they can be used to make purchases, but that no physical cryptocurrency coins or notes exist or can be held in your hand. Unlike traditional fiat currencies like the dollar or euro, cryptocurrencies are typically not regulated or controlled by any one single entity in a single country, instead requiring a network of volunteers from around the world to secure and validate transactions. And a large part of the appeal of the original cryptocurrency, Bitcoin, is in its limited supply, a built-in scarcity. This is inherently counter to the money printing and devaluation that can occur with fiat currencies, but we'll explain all that later. Finance. Speaking of currencies, banks and other financial institutions don't want to be left behind, so they're already using blockchain technology to track and verify their transactions. Furthermore, in March 2021, Visa became the first major payments network to settle transactions with cryptocurrencies. The blockchain's advantage over legacy systems includes things like improved speed. So, for example, sending funds without the need to wait for days, as with some traditional banks. This, alongside higher transparency, lower transaction fees, and overall greater efficiency, leading to this segment's rapid adoption of the technology. But while banks are starting to use blockchain, there are a lot of people who would prefer to merge with finance in a way more fitting with one of the technology's original aims. For example, to provide freedom from oversight. This is an area all of its own, and it's called decentralized finance. We'll go into it in more detail later. Government. Blockchain technology can help governments improve processes related to record keeping, such as verifying digital identities and paying out social benefits. It could even have a significant role in voting systems, eliminating the need for printed ballots and polling stations. It would be transparent because everyone could check the voting count for themselves. The vote stays anonymous, but the count itself can't be rigged. 𝗥𝗘𝗩𝗢𝗖𝗓 in Japan has already used this for social development proposals, with the mayor describing the rollout as an overall success, thanks in part to the ease and simplicity of voting through an application. Retail. Through accurate real-time supply chain records, blockchain can better ensure quality, authenticity, and product safety for consumers. It can help to battle counterfeit goods, being easily provable if a product has a verified source or not. Everyone on the blockchain can follow all the orders on the network, so if you want to get original Air Jordans, you can check where your chosen retailer has gotten the merchandise. You'll know if it's original. Also, if your order doesn't come through, you won't have problems proving it didn't arrive. Everyone would see where the fault happened, so it's full transparency for both customers and retailers. As a result of these benefits, several large retailers like Walmart and Target are using blockchain systems to enhance the efficiency of their supply chain. The food industry. So food products can be tracked from the moment they're made or harvested, right up until they end up in the hands of the customer. This way each product leaves a digital footprint showing where it came from and where it's been. This is important, as foodborne diseases cause big problems worldwide, so using blockchain could shorten the time needed to isolate any toxic food and remove it from the food chain. Healthcare. The blockchain has a wide range of applications in healthcare. The ledger technology secures patients' medical records, manages the medicine supply chain, and helps healthcare researchers unlock genetic code. It has the potential to connect fragmented parts of the healthcare sector, and can also help in generating insights to better assess standards of care. Basically, patients wouldn't need to worry about their medical records leaking to insurance companies, for example. Gaming. In-game transactions are going through a revolution thanks to blockchain technology. Players will purchase assets that will be stored on the blockchain forever. And the notion here is that that money isn't being spent on one-off in-game content, but put into items that can be reused in other games, while potentially also rising in value, so could be resold in other gaming marketplaces. This will eventually play a big part in the metaverse. Well, you've probably heard about that metaverse thing, but if you haven't, it's sort of like being inside the internet with your own avatar. So you could do things like explore marketplaces, buy stuff, or even attend concerts virtually. A whole new way of really experiencing the internet. And on that point, if you'd like to hear more about the metaverse, you should consider checking out our video on the company Unity Software. Media. Blockchain's applications here can help with things like accountability in journalism, making news more verifiable by opening up editing histories on reported content, or helping to combat censorship. Paired with artificial intelligence, blockchain can also be used for helping with deepfake detection. This is to help distinguish between what's real and what's being computer generated for malicious purposes, alongside helping with authentication and security. But it can also help other areas of entertainment too, like preventing digital piracy of created works, while facilitating the correct distribution of royalties in various fields like music or film or TV, all that jazz. Travel. Regarding the advantages that blockchain can offer the travel industry, stability and security rank very highly. The industry relies on different companies passing information between one another, things like flight and baggage details or hotel bookings. Blockchain can assist by providing a more straightforward and secure way for storing and accessing such information. So hopefully your bags don't get sent to Kazakhstan while you're in France, that kind of thing. We'll give you our thoughts now. These are only some of the industries where blockchain technology has the most apparent application. Other end uses include automotive, agriculture, education, and manufacturing. As the world rapidly becomes more and more digital, younger generations are increasingly digitally native, meaning they've never experienced a world without the internet or social media, or perhaps have never even held a physical photograph. And as our recorded history is becoming more digital, it's important that it's not open to alteration and censorship, which does happen. There are already examples of ebooks being edited retroactively, and this is not new. Throughout history, many hard copy books have been altered and edited, and for various reasons. From changes in what's considered socially acceptable language, for example Mark Twain's Adventures of *𝗥𝗘𝗩𝗢𝗢𝗢𝗢 Finn, all the way to governmental bans due to worries of, let's say, incitement. This would be basically any book in an autocratic country that doesn't align with government policy. Either way arguably amounts to a form of censorship and a rewriting of history. When it comes to digital books, this sort of retroactive editing is potentially even easier through online updating. The hope is that by using blockchain, the editing history of a book will become public information. So if a book is released and a line of text is removed or changed, everyone has the ability to track those changes. And there are other cases where even legal information can't be verified due to what's known as link rot, which you can think of as the decaying of older internet information through dead website links. This is what can occur when the information is being stored via one central system. Now, just as a hypothetical example, the photos being stored on Apple's iCloud. If the people who control that system wanted to shut it down or change some of your photos, they technically can because they have the power to do so. Blockchain technology can help keep information and history both truthful and intact by being spread around millions of computers, letting everyone see what, where, and when something is being changed. Unfortunately though, blockchain is not in all areas a perfect system yet. There is an issue of where the original information comes from in a decentralized blockchain. While the recorded links in the chain may be verifiable and can't be tampered with, the original information still comes from an outside or external source. If the original information is wrong or corrupt, then that's a problem. It's called the Oracle problem, and basically means that the trustless system of blockchain is still based on trust from its original source, or its oracle. However, we are still in the early days of blockchain's expansion and growth. Its use cases are varied and in multiple industries, while its acceptance is growing internationally. This is a market that we believe could snowball in future. And remember, we have other videos focusing on game-changing companies, so feel free to check them out too. Now, time to talk about one cryptocurrency in particular, Bitcoin. So what is Bitcoin and why are we always hearing about it? Well, Bitcoin is the most famous example of a cryptocurrency, given it was the first to be developed as well as currently being the most valuable one on the cryptocurrency market. It was created in the backdrop of the 2008 global financial crisis. Several legacy banks once thought too big to fail, did, and in many people's eyes it was due to an inherently flawed system. In this environment, a person or possibly a group of people known as Satoshi Nakamoto developed the first decentralized blockchain. A year later, it would be implemented by Nakamoto as a core component of Bitcoin, serving as the public ledger for all transactions on the network. Bitcoin's intended purpose was to fix several perceived flaws in the way money is transferred, such as the length of time it takes for payments to settle and the high cost of third-party fees. An example of the latter would be someone sending funds home to their family in a developing nation. They'll see the funds get back to their family much sooner, and their home government doesn't get the chance to take off hefty percentages in fees, as the transaction will be direct and not go through any government agency or a central bank. All transactions are recorded, transparent, and public, but there is one key difference between how and where you can buy Bitcoin. It can be purchased on both centralized and decentralized exchanges. Centralized exchanges are a third-party service that make it easier to get into trading Bitcoin, but require personal information, like a passport when setting up an account. You may have heard of some of these, like Binance or Coinbase. These exchanges give you a personal pseudonym which is linked to your account, so the funds being transacted can still be traced to a particular individual. These centralized exchanges carry more risks, being susceptible to hacks, in which case the users could lose all the funds they have stored with the exchange. And this happens, a recent example being the exchange Bitmart. On the other hand, decentralized exchanges don't hold on to any funds and simply facilitate peer-to-peer transactions between users. No need for a pseudonym because every user has a very long password, which you might prefer to think of as a key to a safety deposit box. The key provides access to specific funds, and without it, those funds would be irretrievable. So everyone on the exchange sees that particular safety deposit box, but no one sees who has the key to it. This feature is watertight, and many cautionary tales are available of people losing access to millions of dollars because of losing their key. Now, cryptocurrencies in general have successfully infiltrated mainstream consciousness in recent years, particularly amongst Gen Z and millennials. A recent survey found 55% of 18 to 34-year-olds in the US intend to buy Bitcoin in the next 5 years, and that's up from 32% in 2017. But is there a dark side to the famous digital coin? Well, of course there is, as with everything. Unfortunately, criminal elements have also found applications for Bitcoin. Because of its inherent anonymity, it's been used for things like money laundering. However, probably its most high-profile criminality is through ransomware attacks, as hackers can shut down a company's entire system and then often demand payment via anonymous cryptocurrencies, and more often than not, Bitcoin. That's not the only drawback though. There are numerous issues, and a major one is that the energy used creating the Bitcoin blockchain is environmentally harmful and on a global scale. Validating Bitcoin transactions requires a huge amount of computing power, which results in high levels of energy consumption. And Bitcoin use currently consumes more energy than the entire nation of Argentina. This has been a constant area of controversy throughout Bitcoin's history, and so a new layer of payment protocol has been added to Bitcoin called the Lightning Network. This results in quicker transactions and less energy consumption. However, Bitcoin still has a way to go here, and that's why there's also a focus on renewable energy sources. But what are the positives on the flip side of that coin? Well, there are other ways Bitcoin could potentially be a force for good. Bitcoin's underlying technology and popularity can allow for charitable organizations to highlight their causes and receive donations, for example, in areas like sustainable development, ocean cleanups, and action against hunger. Ideally, aid money would be able to easily move to where it's needed without a need for a middleman, and can stay completely anonymous. This could be a revolutionary new way of giving back to the planet. As we've mentioned, Bitcoin bypasses all government and banking servers, providing a level of privacy not generally available to the public. Due to anonymity and decentralization, Bitcoin became very popular amongst those professing rights to privacy and working outside government oversight. Furthermore, by many of its holders, Bitcoin is considered as a way to protect against the devaluation of fiat currencies and safeguard against widespread economic failure. Because there is a definite number of Bitcoins that will ever be created, 21 million, some believe Bitcoin to potentially be the successor to gold, the historical hedge against inflation. Now, we'll take a deeper look at the financial history and potentials of Bitcoin. Bitcoin has had one of the more volatile trading histories. The first significant price increase occurred in 2010, when the value of a single Bitcoin jumped from just a fraction of a cent to 8 cents. Since then, it's undergone several rallies and crashes, but overall it's risen a hell of a lot since those early days. In late 2020, early 2021, Bitcoin went through a meteoric rise, increasing over 5 times in less than a year. That's a 5x, leading investment professionals to take notice. And for the remainder of 2021, Bitcoin continued to exhibit the highly volatile characteristics it's known for. In fact, as we've been making this video, the price of Bitcoin has been fluctuating wildly, so we're not even going to attempt to give the current price. But we will note that a record high of over $67,000 was reached at the start of November 2021. So what are analysts saying? Well, Bitcoin has quite the mixed reputation. Speculative interest has been the significant driver of value over its lifetime. Many high-ranking members of public, private, and governmental organizations are still very uncertain of it. Some also worry that it's a bubble, similar to the dot-com one of the late 90s or the property bubble of the 2000s, with an inflated price the result of hype and feverish media attention. But not all opinions are so negative. Current SEC Commissioner Hester Peirce believes that given Bitcoin's nature as a peer-to-peer technology, it's tough to restrict activity in that space. She feels it would be wiser to allow cryptocurrencies to interact with traditional financial systems in order to better understand the features of the asset and underlying technology. There's also a good chance that as Bitcoin becomes more widely adopted, it'll begin to lose many of its more bubbly characteristics, like its extreme volatility. So what's currently happening with Bitcoin? Well, as we mentioned, it was during 2020 when Bitcoin's price really started blowing up. Health crisis shutdowns and government policies worldwide created a lot of fear about the global economy, accelerating Bitcoin's rise and leading to interest from institutional investors as well as large companies. Tesla and Block, for example, now hold parts of their company assets in the form of Bitcoin, likely considering it a hedge against currency devaluation, an investment, and a liquid alternative to cash. And if more companies and financial institutions decided to add Bitcoin in future, it could lead to a rise in Bitcoin's market value. In the end though, the reasons behind its price movement remain speculative, And though market sentiment is positive right now, this may not always be the case. An often mentioned positive hypothesis about Bitcoin is that it could be digital gold, protecting against inflation in the same way that real gold does. In this case, it may have a more certain future. However, that's not a proven theory just yet, as Bitcoin's price has actually been growing in correlation to the overall stock market, and we very often see that when the Nasdaq drops, Bitcoin drops. So obviously there's still a lot to be determined here. Now, as Bitcoin expands, is it becoming more broadly adopted? Well, acceptance is certainly growing. Take the case of El Salvador, which you may have heard became the first country to use Bitcoin as its official currency, legally on par with the dollar. The reason given by President Bukele is that it will generate jobs and help provide access to financial products and services to thousands outside the formal economy. For example, 70% of the population has no bank account, therefore, in theory, greater use of Bitcoin should provide a boost to the economy, given it allows for quick, cheap money transfers and transactions, independent of banks. But the other side of that argument is that at least half of El Salvador's population have no access to the internet, a requirement for making Bitcoin transactions, and that's kind of a big deal. There are a lot of questions to be answered here, so we'll keep an eye on this as it's a very interesting situation. It's clear to see that there are both upsides and downsides in the implementation of Bitcoin, but its rise has undeniably been very impressive. It's got the attention of many retail traders and financial institutions, and remains the most popular cryptocurrency. Let's have a look at Ethereum. Ethereum is a decentralized open source blockchain platform where the network's users can create, publish, monetize, and use applications. Ethereum's own cryptocurrency called Ether is used on the platform as a method of payment. Now, Ethereum allows for greater application of blockchain technology. It's not just as a ledger for cryptocurrencies, but also for smart contracts too, often referred to as the backbone of the platform. But wait a second, what's a smart contract? Well, they effectively work the same as regular contracts, the difference being though that smart contracts are self-executing and in a digital format. Existing on a blockchain, they have all the exact properties of any other blockchain application. They're immutable, meaning can't be changed, and distributed, meaning everyone has a copy. Their main purpose is to avoid the need for a third party to execute the terms of the contract itself. In a regular contract, a third party would be like having a lawyer involved when you buy a house, so a smart contract gets rid of any middleman. And being solely a piece of code, smart contracts are designed to remove human error. If the terms are not met, the contract is not fulfilled. Smart contracts can be very efficiently applied to the elements we mentioned earlier, like secure and transparent voting systems or supply chain improvements, but also in areas like crowdfunding or in the smart processing of claims and insurance. So let's go back to Ethereum itself. What's so special about it and what makes it different? Well, Ethereum was co-founded by 8 individuals in 2013 and released in 2015, but the principal inventor, Vitalik Buterin, is the only one of the original group who continued to be involved with Ethereum. Buterin designed it to be much more than a payment system that tracks ownership of currency, and his blockchain focuses on running the programming code of any decentralized application. Ethereum is unique in that it's programmable, meaning it provides the ability to program many different types of smart contract within the Ethereum system. This essentially means that it's a global computer, where you pay with digital assets, even Bitcoin for that matter, and applications can be built and be viewed by everyone. For the likes of tracking property details in real estate, protecting medical data in healthcare, or improving the integrity of elections. So what are the other possible uses of the Ethereum platform? Well, we mentioned smart contracts being the vital component for Ethereum, and that's because all of its other possibilities are created and executed through them. For example, the decentralized applications built on Ethereum, which are called dApps by the way, are actually groups of smart contracts, and one of their main benefits is that they run as programmed without censorship, downtime, or influence from a third party. For example, when using decentralized messaging applications, the information doesn't go through a server that a company like Facebook, now Meta, owns. The messages go from peer to peer, from one person to another directly, so you get more privacy and no censorship. The same goes for decentralized finance, DeFi. an umbrella term for financial services available on public blockchains, though primarily Ethereum. With DeFi, you can do most things that banks support, but faster and without the need for a third party. DeFi took the premise of digital currency and expanded on it, creating a digital and decentralized alternative to Wall Street. Users engage with DeFi through the decentralized applications on Ethereum, and using them, one can take out a loan, lend funds, trade, and even save for the future. A major upside being most of the services will have smaller fees than when a bank is acting as the middleman. Smart contract technology has also come at a time when there's been more interest, especially amongst younger people, in investing in co-ownerships for a single asset. So multiple people can own a digital asset, like an expensive domain, art, or even physical property. Smart contracts are an effective, transparent solution for executing and recording transactions in a co-ownership scenario. NFTs are a good example of digital ownership, but what are they? NFTs stand for non-fungible tokens, something that's emerged from smart contracts. And this technology is related to blockchain's usage for in-game content we mentioned earlier. They're another type of cryptographic token representing ownership of digital goods, such as art, collectibles, or more. No two NFTs are the same, being unique tokens on a blockchain. They can range from digital images to trading cards to virtual real estate, whereby people can own digital land within a virtual world, like the metaverse. On this point, in a game world with millions of users, virtual land can become valuable. The right location is always a valuable advertising opportunity, whether digital or real. And speaking of real, even physical property is being purchased via NFT marketplaces. So yeah, people can sell their houses in exchange for non-fungible tokens. Currently, most NFTs are part of the Ethereum blockchain, but keep in mind that NFTs are controversial. Some people believe they're a revolutionary new investment vehicle, while others say they're essentially ownership of nothing and a byproduct of a bubble. So, does Ethereum shine like gold, or is it just glitter? Well, since its launch, Ethereum has established itself and become the most actively used blockchain network, and also the second largest cryptocurrency, which has helped fuel an increase of new rivals to Bitcoin. Not bad for that short a time frame. But of course there's downsides. Like Bitcoin and pretty much most cryptocurrencies out there, Ethereum negatively impacts the environment due to the high energy consumption levels that are required for the validation process. However, Vitalik Buterin is continuously working to address these problems, and Ethereum is in the process of transitioning to an upgraded version of itself, Ethereum 2.0. This version will implement several new features that will improve scalability, speed, and efficiency. Most importantly though, the validation process is being changed. Not only will it now require around 99.9% less energy consumption, but it will give Ether holders the opportunity to earn money on their holdings through an operation known as staking. Staking can be a complicated idea to get your head around depending on how deep you want to go, but essentially, any Ether that a person stakes is put to work in the validating process, with the owner compensated through a percentage rate return, and potentially a high percentage return. It's very similar to giving a loan to someone in order to build something. You will lend them the resources to fund the build, and then they have to pay you back with interest, high interest. Now, we'll take a deeper look at the financial history and potentials of Ethereum. So, Ethereum first traded on August 7th, 2015 at a price of $2.77. It would see strong growth early on and reach a then record high of $1,420 by January 2018. Over the next few years, Ethereum's price dropped distinctly, falling below $200 for much of that time. However, in 2021, Ethereum's price rose over 500%, reaching a new record high of $4,800, sending Ethereum's market value higher than the likes of Nike, AT&T, and Coca-Cola. These recent movements are in line with the trend of soaring cryptocurrency prices, but also with some massive declines. For example, Ethereum has lost half of its market value twice in the last year, as of March 2022, indicating that the volatility of these assets has not yet lessened. So, what are analysts saying about Ethereum? Well, historically, Ethereum prices tended to move in line with Bitcoin. However, lately, this is less so the case, with Ethereum more and more being driven by its own catalysts. It's important to note that in this sense, Bitcoin and Ethereum are viewed differently. The reason is that, except for the cryptocurrency part, they're used for very different purposes. Ethereum already has a highly engaged developer community, with one of the most popular crypto networks on code distributing sites like GitHub. This suggests an expanding ecosystem of users on the platform, likely coming up with new and innovative ways to use the blockchain, as well as smart contracts. This is key to Ethereum's value. Now remember, we also have other videos exploring game-changing companies that we'd recommend you check out. Okay, let's wrap up all them chains and coins we talked about today. So as we've seen, blockchain technology has numerous positive applications, and it's being taken on board by many of the biggest industries around the globe. Acting as a virtual notary, blockchain is an impartial witness for authentication, certification, and reliability of information. Of course, as with all technology, it's not flawless. An issue we've mentioned before is faulty or inaccurate data being added to a blockchain when it's first made. This can even present an issue with Ethereum and its smart contracts. Even though they may be set up to be unchanging and trustworthy, they're still created by humans who are capable of error when creating them. Both cryptocurrencies we talked about, Bitcoin and Ethereum, have only increased in popularity in recent years. Bitcoin is the original cryptocurrency, and Ethereum's technology continues to develop and gain more widespread adoption, particularly in areas like decentralized finance, that's the DeFi thing we talked about earlier, hosting products and services like asset management tools, decentralized stock exchanges, and other alternative solutions outside of the control of central authorities. In general, there's still a lot to be determined in the crypto space. Some will undoubtedly fail, and some deservedly so. The ones created to profit off hype and to take advantage of likely ill-informed individuals. However, there'll also likely be some winners too, resulting in them enduring as digital commodities in the years to come. Bringing it back to blockchain, its growing international presence could help shape our future by increasing trust, transparency, and security in industry and everyday life. So, after exploring blockchain and many of its applications, we're gonna leave you with a question. What could an investment in blockchain technology now be worth in 2025? If you want to see more short documentaries like this, go to our YouTube channel or LinkedIn page. Make sure to subscribe or follow, and there, you'll be able to enjoy more of our videos.